In this video, we're going to continue where we left off. So we ended on January 16, and we had all of these journal entries, the first 10 journal entries. So we'll continue with the next 5 journal entries that we need. All right. So on January 19th, ABC sales department was cleaned by a cleaning company, Super Cleaners. After cleaning, Super Cleaners left a bill for ABC. So this is important because Super Cleaners came to clean, and we didn't pay Super Cleaners. Super Cleaners left a bill, and we will pay them later. And this is for the sales department, so this is a cleaning expense. So you received cleaning services. So for ABC, that's a cleaning expense, and ABC is going to pay them later, so they owe money. So let's figure out what accounts these are. So one, it's an expense, and we're going to have cleaning expense. You can have any kind of expense account, pretty much, right? We don't have cleaning expense listed here, I don't believe, but you can have pretty much any account. You can call any account an expense account. So it's a cleaning expense account. What happens to the expense account? It goes up. So whenever you receive services, that increases the expense account. So we're going to debit cleaning expense. So now, what did we give in exchange for the cleaning? We gave an IOU, or an accounts payable. When you receive work and you owe someone money, that's an accounts payable, and accounts payable is going up, that's a credit. So our journal entry is going to be a debit to cleaning expense selling, because it was done for the selling department, and a credit to accounts payable. So I'm going to go down to cleaning expense. So that's the expense account. So you have cleaning expense here. It's going to be a debit, right? And then I'm going to go up to accounts payable, which is in the liability section, and I am going to credit accounts payable. Okay? Next, I have ABC purchased office supplies on account. On account means that I did not pay for it. I received the supplies, but I haven't paid for the supplies, right? So what's going to happen to my supplies account? My supplies is going up, right? So that's going to be a debit. When I receive something and I haven't paid for it, I have an IOU. What account is that? That is accounts payable. Notes payable is usually when we borrow money. Accounts payable is when we receive goods or services, we haven't paid for it. That's accounts payable, okay? So in this transaction, I've received supplies and I owe, so I'm going to, right? I'm going to debit office supplies and I'm going to credit accounts payable, okay? So I'm going to go down to assets. Office supplies is an asset, and I'm going to debit office supplies for $1,500, and I'm going to go down to accounts payable, which is a liability, right? And I'm going to credit it for $1,500. All right. Okay, let's look at the next one. ABC provided services to another customer and receives cash. Whenever you see this provide services, that is sales revenue. Sales revenue increases whenever we do work. So here you have revenue, service revenue, that's an increase, it's going to be a credit. So we know we're going to credit. What do we get in exchange for that work? We receive cash. Well, cash is a debit because it's going up, right? So cash is an asset. When it increases, we debit. So I'm going to go to my transaction, right? I'm going to debit cash, and I'm going to credit service revenue for $25,000 because it said $25,000, okay? So now I go down to cash, and I'm going to debit cash for $25,000, and then I go to service revenue, which is in the revenue section. So here's my revenue, service revenue, $25,000. Okay. Now, the next line item we have is the customer from January 10th made a partial payment to ABC for services received. So the customer from January 10th, right? So here was the customer. We provided services on account. So the customer owes us $55,000. If we go to our accounts receivable, if you look at our accounts receivable account, you'll see the balance in accounts receivable is $55,000. This is how much the customer owes us, right? Well, the customer hasn't paid us yet. So now it says the customer from January 10th made a partial payment. So they paid us $35,000 of the $55,000. Okay, great. So here's what you'll see happens to the, so let's do the journal entry first, and then we can look at the balances, right? So we, first of all, we receive cash, okay? So I'm going to debit cash for $35,000. Now, this is where a lot of people make mistakes. We did not do more work, so we're not going to credit service revenue, right? We already did the work on the 10th. On the 10th, we debited accounts receivable for 55, and we credited service revenue for 55. So now that we're getting paid, we're not going to adjust service revenue again. The only thing we have to adjust is accounts receivable, because accounts receivable right now shows a balance of 55. Well, I just got 35, so accounts receivable has to come down. How does accounts receivable come down? It comes down with a credit. So I'm going to credit accounts receivable for $35,000 to reflect the amount that was paid. So I go to cash, and here's my $35,000, and I go to accounts receivable, and look at the balance in accounts receivable. Look what happens to that balance. Now, instead of 55, my balance is 20, because I owed 55, I got paid 35, and so now I only owe 20. Okay, let's look at the next one. So it says ABC had depreciation on building for the month of January, right? So depreciation on buildings. So you're not going to know too much about depreciation yet. Just know that whenever you have depreciation, you're going to debit depreciation expense and you're going to credit accumulated depreciation for whichever item it is. So it's a building, so we're going to debit depreciation expense and we're going to credit accumulated depreciation for the building. So the journal entry, and you'll just need to memorize this until we get to this chapter and I explain exactly what these two things are. And we only have a depreciation and expense administrative account, so we're gonna put it there. So we're gonna debit depreciation expense administrative for 2000 and credit accumulated depreciation building for 2000. So notice, this is important. When you have depreciation on the building, the accumulated depreciation account needs to be the accumulated depreciation building account, okay? So now that I have this, I need to go to my expense. So I'm gonna go down to my expenses. Here's my sales revenue. And here is depreciation expense, okay, for 2000. And my accumulated depreciation is a contra asset account. So I'm going to go to the asset section, right? Here's the accumulated depreciation building, and I credit it for $2,000. Okay, so now these are the last 5 entries that we have. 1, 2, 3, 4, 5. These are the 5 that we just did. Okay, I'm going to go here and I'm going to mark these off with 5. Right, mark these off in red. So we just did these 5. Okay, so I'll pause the video and I'll create another video for the last 6 entries.